Hey everyone, welcome back to Corporate Decoder. Today we're diving into a financial report that's a bit like a tangled web, involving subsidiaries, international regulations, and some pretty important numbers. Let's see if we can unravel this for you. And before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for deeper discussions. This report is coming to us from Pacific Oak Strategic Opportunity REIT Incorporated, and it focuses on something filed at the very end of May in 2025. Specifically, it's about financial statements from one of their subsidiaries, Pacific Oak SOR, which is in the British Virgin Islands. This subsidiary had to file these statements because it offered bonds to investors in Israel. So why are we even looking at this? Well, it all boils down to something called Regulation FD, or fair disclosure. Basically, this rule says that if a company shares important information with certain people, like analysts or investors, they have to share it with everyone. In this case, because Pacific Oak subsidiary filed these financial statements in Israel, they also have to make them available here in the US. Now let's get to the heart of the matter. Pacific Oak SOR in the British Virgin Islands, a wholly owned subsidiary, issued Series B, C, and D bonds starting around February of 2020. These were offered to investors specifically in Israel and were registered with the Israeli Securities Authority. This means that the subsidiary has to prepare and file certain financial reports according to something called International Financial Reporting Standards, or IFRS. Think of IFRS as another way to measure a company's financial health, like an alternative to the accounting rules used here in the United States. On May 30th of 2025, Pacific Oak SOR filed their financial statements according to IFRS. These statements give a snapshot of how the company was doing financially. We are looking at what they call interim financial statements, which is like looking at quarterly or semi-annually results, not an annual full report. Now, the interesting part is that the company has provided these financial statements as exhibits to this report. That's great news for us. Let's dive into the numbers. First, we'll look at the consolidated interim financial statements. Keep in mind these numbers are unaudited, which means they haven't been checked by an independent auditor. They cover the period ending March 31st, 2025. Let's jump straight to the good stuff, the financial statements. The statement of financial position, which is like a balance sheet, will show us what the company owns assets and what it owes liabilities. It also shows equity. The total assets were approximately $398.5 million. This is what the company owns. The total liabilities were approximately $327.27 million. This is what the company owes to others. The total equity, the difference between what the company owns and owes, was about $70.8 million. Now let's move on to the statement of profit or loss and other comprehensive income. This will show us how well the company performed in the first 3 months of 2025. The revenue was about $21.2 million. This is how much money the company brought in. The profit for the period was about $1.7 million. This is the money left over after subtracting all the expenses from the revenue. Next, let's peek at the separate interim financial statements for Pacific Oak SOR. These are also unaudited and cover the same period ending March 31, 2025. Looking at the statement of financial position, we can see a similar structure to the consolidated statement, but these numbers focus specifically on Pacific Oak SOR in the BVI. The total assets here are approximately $382.7 million. The total liabilities are around $327.6 million. The total equity is about $55 is about, let's look at the separate statement of profit or loss. The revenue is about $11.2 million. The profit for the period is approximately $1.5 million. Alright, that's our breakdown of Pacific Oak's filing. Let's take a step back and look at the big picture. Pacific Oak as a REIT invests in real estate and related assets. The fact that they have a subsidiary issuing bonds in Israel tells us they are actively seeking capital from different markets around the world. The British Virgin Islands subsidiary seems to be a key part of their capital raising strategy. It is interesting to note that their profits are very low and their liabilities are extremely high. It would be nice to be able to compare these results to previous years to understand better trends, but we don't have the data today. As for risks and opportunities, the company likely faces risks related to currency exchange rates and the regulatory environment in both Israel and the British Virgin Islands. A potential opportunity could be expanding their investor base in international markets. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for deeper discussions. Thanks for watching. See you next time.